Aloha, all you moneymakers. I'm super excited to have my good friend Rich here. He's our loan officer. He does a ton of different loans, and we're going to talk to you guys about loans and all the different programs out there and the creative financings that you can do with loans. So let's dive into it. Let's have some fun, and let's go. What if I told you guys that subscribe button is the only thing that's separating you from financial freedom? Because knowledge is power. I'm going to give you all the knowledge so you can succeed in life. So, how do we meet each other? Tell everyone who you are out there. Let everyone know.
Yeah, absolutely. So, as Intro introduced me, I'm Rich Chavez. I've been on Hawaii for going on 2 years now. I met Indar probably 2020. I think I met him at one of his flips in downtown it was one of those penthouses.
Yeah.
I think I can't remember which one it was, but it was during COVID. We were coming down visiting. I was looking for spots to get married in, and one of his buddies and my buddies called him. He said, "Yeah, I'm having a kind of like I'm getting ready to place this house on the market, and I want to have a get together or a party before I list it." Right.
Yeah.
So
it was a penthouse. We got to enjoy it. We never get to enjoy the penthouse. These nice houses sometimes, and it was cool.
Yeah, it was cool. I met Indar. I met
like 10, 20 people there.
Some of his rowing buddies a long time ago, but that was the first time I met you. And then I think a couple months later, I ended up moving to Hawaii, and we share an office. We have friends. Kids hang out. So. Built a relationship for the last 3 years in real estate, personal, and stuff like that. So, yeah.
And Rich comes from a big background of lending, as well as he's getting his broker's, his real estate license. So he's on both sides of the playing ground, where he's doing lending, as well as an agent. He's taking his broker's license here in Hawaii probably next week. I think you're taking it.
Yeah, I'm taking my broker's license next week. But yeah, when you say, I'm also a real estate broker in California. I've been a real estate broker in California for 5 years now, so I have the real estate background.
So he knows both sides, not just the loan. About being.
I know the struggles of real estate and how to structure loans to make everyone happy. Yeah.
And then so let's dive on. So what was your journey of becoming a loan officer and being in a loan? How did that all start, and how did that all lead up?
Yeah, so I guess we can start before real estate, because real estate as being a real estate sales agent kind of moved me into loans, but I didn't get into real estate until I was 30. Right, I'm 38. I'm going to be 30. No, I'm going to be 39 in a few months. For the first 10 years of my working career, I was doing corporate work. Right, I was going to the office. I was, being there 7:30 in the morning.
What were you doing?
I was in supply chain. So I was,
with Jay? Is that where you met Jay?
Yeah, so I was. I worked with Jay, one of our mutual buddies. And we both started in logistics and supply chains, basically moving junk throughout the country. Right, it can be a pen, it can be a pencil, it can be, food. We're just moving it from, East Coast to West Coast, South America to California, just moving stuff. Right, so. I thought it was one of my first jobs in college, so I thought, okay, I'm gonna do the rest of my life, right? I'm gonna move stuff and have a salary. And back then, when you're in your early 20s, you're like, oh shit, I'm making $50,000 a year, right?
Yeah.
I can live off $50,000,
Yeah.
But as my career went on, I even started making 5 years later, I'm making $60,000, I'm making $70,000 and $80,000, and I've been doing this for 10 years, right? So wasn't quite sure what to do when I turned 30. I was having a baby, my first kid, and our buddy Jay was a realtor, and he said, "Oh, well, why don't you think about it?" So I thought about it like for 2 seconds, and then I quit my job. So I quit my job. I wasn't even licensed, by the way. So I went to I was doing cold calling.
Yeah.
Before actually, getting licensed, to kind of get my feet wet a little bit, trying to get in there. So I quit my job, and I just made calls all day for like 6 months. Yeah, 6 months. Then I finally got licensed, and then from there I became a realtor. And then really fast, I was like, okay, well, we're referring all this business to to banks, to Wells Fargo, or to lenders that are out there, and then I started to notice kind of a thing where a lot of these guys that were saying in business were never in an office, right?
Mm.
They're always out in the field, they're always on vacation, they're always doing something. On the weekends, they're always they may or may not be available, but they're always out.
Yeah.
So I was like, okay, what are these guys doing that I don't know? I'm showing buyers, working with sellers, 7 days a week, almost for a whole 3 years straight.
Well, what led you to the loan program, to get into loans more?
Well, seeing these guys on vacation while I'm working 7 days a week.
Oh, would you? Okay.
Yeah, so I was like, okay, well, if these guys are doing it, let me go get my license.
Yeah, get your mortgage license.
Yeah, so I get my mortgage license, and
Yeah.
that's kind of, it's actually quite easy to get your mortgage license.
It's funny. There's so many different loan programs we're going to talk about today, and there is a lot of lenders. I know this one lender who's been a mortgage broker for 30 years, and he didn't know what a hard money loan was. Is because he just stuck in his lane. He knew his traditional financing.
Yeah.
I explained to him what a hard money loan was like 3 years ago. He's an old guy, and they never had to be outside the box. But that's what we're going to talk about, and that's why I use Rich, because yes, everyone knows there's some basic loans out there, but there's so many other new loans out there, the DSCR loans, the hard money loans, the different types of other loans that you can use to make deals work when you may not qualify for the traditional way of getting lending. So some of the basic loans, let's dive into it. So some of the basic loans everyone knows about, it's a 30-year fixed conventional loan. And there's different types of conventional loans, right? There's the VA, a VA loan.
Well, you have the conventional side, which has the conforming and the jumbo loans, right? Mm-hmm. The jumbo loans are pretty much, anything that's over the county limits,
So jumbo loans are if you purchase a home that is more than, I think it's $1 million something, right?
Yeah, just over $1 million.
Just over $1 million.
Yeah.
If you buy any house over $1 million, you have to now move into a jumbo type of loan.
And then you have your government loans, which is FHA loans, VA loans, and then your USDA loans.
So there's a FHA loan. This is a federal. It's the Federal Housing Authority, FHA, Federal Housing Authority.
Yeah, FHA, Federal Housing.
So federal government is basically has money to give out to us people to buy loans. You have to qualify.
They don't have money. They insure the loan. They insure the loan. The buyer comes in with upfront mortgage insurance, low down. It can be 3.5%. FICO can be lower. You can be heavy in debt. You can be highly leveraged and still qualify. It's a great program for here in Hawaii.
For first-time home buyers.
It doesn't have to be first-time home buyers.
Yeah.
So you can be any kind of buyer. It has to be a primary.
It has to be a primary house.
Yeah, it has to be a primary. But in Hawaii, a lot of condos especially, are not FHA approved. So what we're doing is we're getting specific units in a housing project, and we're approving a unit versus the whole complex. Because what the FHA did this last April is they actually lowered the mortgage insurance per month. So it's actually a lot more affordable for people to get into the FHA loan versus conventional sometimes.
Yeah, the FHAs are normally one of your best loans that you want to try and utilize.
Yeah.
VA and then FHA is right there. VA is your cheapest, of course.
Correct.
And if you don't know what VA is, that's a military-backed loans. So any service member out there, thank you for your service. You guys got great loans, so utilize those.
Yeah.
But right off the bat. But the FHA is generally your best, cheapest loan. I think USDA, that's agricultural, so there's an agricultural, U.S. Department of Agricultural loans. Those are probably
it's a great loan too. I mean, Waianae, every day on the west side.
It has to be an affordable house.
It has to be a rural area.
A rural area.
Yeah,
so this is generally Waianae and Ewa, pretty much on our island. So it's not going to qualify for those higher end homes. But another cheap and great loan to utilize. And so we're just utilizing debt, and that's what we're talking about doing here. We're utilizing this cheap money from the U.S. government that wants us to buy houses, that wants us to own properties, and that's what we're talking about. So those are definitely your cheapest and easiest loans.
Yeah.
And then what would you say next would be?
Well, you got the government loans, but there's also a lot of programs that are kind of built into like these FHA loans, right? There's like the down payment assistant loans, the FHA down payment assistance.
I got when I bought my first house, I had a down payment assistance, and I only had to bring 1% to the table because Hawaii had some down payment assistance.
So there's a lot of that, and coming here to Hawaii, you don't see a lot of it being utilized. Kind of like the FHA is not utilized here. I don't know it's because they just don't know about it. I think it's maybe the shift in the market where now it makes sense where before it didn't make sense. So there's a lot of those FHA-backed down payment assistance programs that are available to people that live in Hawaii. And a lot of the mainline lenders will do.
And you guys want to know about this because this is just allowing you to bring less to the table. The more money you can borrow from the government, it's great. It's cheap money. Federal money is generally cheap money. So borrow as much as you can and then put your money elsewhere and make it work. So think about it that way.
Yeah, absolutely.
So after that, you get the assistance programs. What would be the next type of loan?
Well, your VA is always the best option, right? In terms of veterans, the stuff that I always hear and see out there is, well, you can't have a non-VA borrower and a VA borrower on one loan. You can, but you do have to bring a down payment to it. So it's possible in that scenario you can have two VA borrowers on one loan as well, where you split up the entitlement on it. So you're splitting up the entitlement. You're not using your full entitlement. Some of the stuff I see out there with lenders in Hawaii, they have a lot of misinformation with VA loans. Again, is probably the strongest loan out there is that VA loan because it's zero down, no debt to income, no loan limit. So just as long as you have some residual income, you have good FICO and good reserves, you're going to qualify for a high purchase price.
So the next type of loan would be a DSCR type of loan or a bridge, fix and flip.
Yeah.
Basically.
Yeah, I mean, the DSCR loans is kind of what we do.
So DSCR is really popular in the last 2 years, and that's taking a property that you don't qualify, your credit score is bad or whatever, you don't qualify, you don't have enough income. You can then take that property, correct me if I'm wrong, and you can look at it as a rental standpoint. So you can buy this property at the debt to service ratio income type of loan. So you're going to look at this property as a potential rental property and purchase a property as a rental property, right?
Correct. A DSCR is debt service coverage ratio, right? All it means is that your potential rental income that's coming in is at least $1 more than your PITI plus HOA, if you have one.
So it's taking a property and you're buying. It could be your residence. You could be moving in there, but you're going to analyze it like it's a rental property, and that allows you to purchase a property when you don't have everything else working in your favor.
Yeah, it's technically it's a business loan is what it is. It's the way we see it. We see it as a business purpose loan. It's for business purposes. A lot of times we get borrowers into, you're talking about bridge loans, right? You have someone who needs to obtain a property, quickly, like a judicial foreclosure where you have to close in 7 days, right? You're going to get hard money for that property. You're going to close it, and the day of closing, you're gonna do a DCR to have more of a long-term program and kind of settle the property down. Now that you're going to have a lower interest rate as well. So it's kind of what you see. You see a bridge loan into a DCR. Because the rental income coming from those properties are usually higher, and then they easily cover your PITI.
They're great to use. We do them a lot because they're non-recourse loans too.
Some of them are non-recourse loans. Yeah. Some of them, not all of them, depending on where you go with it. But I mean, there's no tax returns, no income,
no docs.
Only thing we look at is to make sure there's no lates on your primary residence, and if you're doing a refinance, that you've been on time on all your current mortgages.
So they don't care about your taxes much. They only care about the property. They care about the asset. And we're just talking about non-recourse and recourse loan, meaning that if something happened to you, foreclose, whatever, they're not going to come after you. If it's non-recourse, if it's recourse, they'll come after you, and you're personally guaranteeing everything about the property. And that way they can just come after the property and take the property back, and you're kind of okay in a sense. They're almost better for you, technically, where you can just give the property back if you stop making payments, or it's safer for you technically. So we do DSCR, and then we do bridge loans. So bridge loans are hard money loans. They call them bridge loans, meaning they're just short period of time. You want to talk about bridge loans?
So a bridge is you're just bridging to a long term. You're getting your hard money loan, and you're going into you have a way out to get rid of that loan, right? You're going to go into a DSCR or maybe a full doc investment loan or sell. So it's a short-term interest-only loan, usually higher interest depending on experience, depending on FICO, depending on the deal, right? How's the deal look? Does it make sense? And how are you getting out of it?
So bridge loans I've been doing them for years now with a ton of different lenders. They're really easy to get, and again, non-recourse, so they don't care about you. They're only going to care about the property, the asset. They're going to evaluate this property, make sure the numbers are right for whatever course you're going to do. You mostly are going to buy these assets at extremely discounted price because you can value add, and then you can sell it or you can refinance yourself out of it. You don't want to keep a bridge loan longer than 2 years at most because it's just carrying cost is way too much. Although I'm getting some bridge loans right now at 8 and
really good rates,
8.5. Some of our rates we can get at. So sometimes it does. If it's close to what market is. I have some DSCR long-term loans at like 5%. That was, the market was at 2%. So those are great loans to have.
Yeah.
So the hard money loan is kind of like your last resort, I want to say, but it is the quickest and easiest way to get a late deal. And often I get from some other non-investor kind of people is, why don't you just use the cheaper loan? Those cheaper loans, FHA, and those loans, you can't use one time because it's not my primary, but those types of conventional loans are hard to deal with, take longer. The seller often doesn't want to sell you that home if they have to deal with all of that. So on a bridge, hard money loan, they say you can close in 2 weeks. It never is really 2 weeks, but it's normally a very easy process to deal with. And we do bridge loans. So Rich does all types of loans, but we have a bridge loan team company together, White Sands Capital. So we do bridge loans where we take advantage of all these different lenders and these relationships and these lines of credit, banks, and we utilize that for you guys out there. So Rich, we have a loan program for you guys, which is why I'm referring you guys to Rich, because yes, you can do a hard money loan and DSCR type of loan if no other reason fails, but now you have a guy that can do all the different types of loans out there instead of shopping around to all the different people. It's great to have that resource at your fingertips. Hey, I want to buy my primary. Hey, I want to, buy this rental property. Hey, I want to buy this flip. Now you can look at, these different types of loan programs. Hey, I don't have solid taxes. My credit looks bad, but I really want to buy a house. So what kind of program can we do? So it's nice to have all the different resources at your hand with Rich. And that's why I use Rich as well on a bunch of our stuff. Would you say that?
Yeah, absolutely. There's always a way to get a property financed. I think in this market, I think we get all the questions, and most of the questions I get is it a good time to buy? Interest rates are high. There's a lot of misinformation out there. People that are reading online, the new one is like, the rich people are getting screwed, the poor people are getting better rates, and like all that stuff.
Yeah.
And, to a certain extent, in some scenarios that may or may not happen, but it's not about comparing yourself to everyone else, right?
Yeah.
It's like, can you afford a home? Can you afford a property? If you can, you should buy. Especially if you're buying, if you're buying your first house, the worst thing you can do is not buy.
Yeah.
Especially if you qualify.
Talk about rates. So yeah, the Feds just came out yesterday, and basically we're going to keep this rate where we're at for the next year. Yeah. So we're not having any changes here. With that said, we've already seen it now in our markets where people recognize it. This is where we're at. So we're going to buy a house. Shoot, if you own a house here in Hawaii, just in a year, it naturally appreciates. I have so much property, and I'm just so blessed and thankful for some of these properties. Just by owning them, I made $100,000 just by going up in value. And what we do is we'll buy properties with hard money loans. I actually do a kind of a 3-step process. We'll buy a property with a hard money loan. We'll refinance it and trying to take out all their investors because rates are high right now, at least take all our money out, get that money back out to redeploy, move money. And now I'm into still a high rate loan. And the third step is to do a cash out refi. So cash out refis are great. One, they're easy to do, right?
Yeah.
Two, I think the lenders almost see that, hey, he's already got a loan when he bought it. We're just like for like. So it's almost an easier process. The previous lender vetted the loan, when you move into a cheaper rate loan. Then. So you can buy something now and be at 7%, even 8%, 9%. If you can stay alive and, be able to afford that for a year or two until it gets back into, 4 or 5%, wherever we end up in a couple, 3 years or something. So you can think differently in that way. And that's how we think. We think differently. Don't think like everybody else. And that's what separates, I think, successful people. Don't think like mainstream everyone is teaching you to think differently. Think of the velocity of money. The quicker you can move money to do more, quicker you can purchase a property, let it appreciate in value, refinance it out to a cheaper loan later. You have equity now built in. You can use that equity to buy more. There's so much different scenarios I can go over to you guys with just, buying a property now with whatever it takes. And maybe we find more deals right now too. So, if once the money goes back cheaper, you're going to go back competitive again. Prices will be harder to find, good deals. So, don't worry about rates. Worry about the deal, the property. If you need a house, buy a house. If you need a rental, go buy a rental. Don't worry too much about rates and so forth. Or you can be like all the normal people, or don't buy a property at all. Up to you. But then just telling you what we do and what the rich people do. So, pick one. Take your time.
The rich people, yep.
The rich people do.
Yeah.
Is there anything else you want to touch on loans?
No, make loans your friend. Yeah. Right? That's the title of the episode. Yeah. Make loans your friend.
Make loans your friends, guys.
The more loans you have, the better credit you have, the more times you've figured it out. It's not easy to get a loan, but if you can qualify over and over and over, you're doing something right.
Yeah. I mean, you're utilizing money, free money, government money. Not all countries have this type of loan programs, this government-backed programs where they want you to be homeowners. It definitely allows you to be successful and to have net worth and to grow equity and to have property that you can leave down to your kids and so much more to be a homeowner. You have tax write-offs for rentals. You have, depreciation. There's so much more. You have rental incomes. You have generational wealth. So much more you can do once you start understanding different loan programs and understanding how to capitalize on these different programs out there to utilize, to do more in life. And it's a huge factor in what we do. I think I'm a professional loan program
app taker.
Yeah. I'm literally filling out apps and refinancing, and we just closed on commercial loan right now, and commercial loans are a big animal. So there's so much different types of loan programs, and I don't know all the answers. I'm still learning every day myself. Just real quick, if you guys like what you're hearing, thank you guys for listening. I'm so appreciative for you guys to follow along. And please just leave a like or a comment or message me. Love to talk to you guys. Please subscribe to everything below. Super appreciated. And aloha. So we do have a question, and the question is, why do you think people are so afraid of loans? And this is from Gary.
From Gary.
Yeah.
People are afraid of loans because of all the misinformation that's out there, in my opinion. Everyone thinks is the market going to crash? What's going to happen next year? The Fed is increasing rates. My Uncle Paul said it's bad time to buy. Everyone has an uncle that gives bad advice. And they're just scared,
I think people are scared of loans. It's not the loan. It's the process maybe, or the purchase price amount. When you buy a $500,000 house, that's a big number to think about. Yeah, and the process is...
the process is not that bad, right? It's an application, send me your docs, and if you're not where you're at, if you can't qualify, I'm going to tell you how to get there. Yeah. So I make it easy for you if you want to buy with $500,000, this is your payment, right? If you can't afford it, great. Let's look at alternatives.
Yeah.
Let's look at down payment assistance, maybe less down. Let's get your foot in the door. Okay, so your rates are high, right? If you buy a house, let's say 500,000, right? And your payment, let's just throw it out there, it's $3,000. Okay, you're gonna own a home for 3.5% down.
Yeah.
Now in 2 years, you're gonna refinance that home either into an FHA again or into a conventional loan, or you're gonna sell.
And it's went up in value, so you just made it's a silent bank account. Your house is a silent bank account. Your home's going up in value, or
so now you have 200,000 in equity or 200,000 in cash in your bank account. Where if you weren't explained why you're doing this from the get-go, you just lost $200,000.
Yeah. So you're losing $200,000 right now.
Well, like I said, if you're not buying, you can. Then yes.
Yeah.
That's why you buy when you can.
You buy when you can, and they're not going to give you a loan if you can't afford it.
Right.
So, I mean, if you want to make $200,000, go spend your Saturday, call up Rich, and just see where you're at.
Make loans your friend.
This is how I started. I didn't know what to do. I didn't know where I'm at. I called up a loan guy, and he just talked me, hey, I need your good tax returns for the next year if you want to do this. Or we need some W-2 statements, So it just started the process for me. It started, it's not an overnight success kind of story here.
Yeah.
So it just starts your process. Hey, we need to start seeing this. Hey, you want to buy $1 million house? Okay, you need to qualify $150,000 a year to qualify for $1 million. So you just start the process to where you want to be, and then even till to this day, what you want to do next year. You're just planning what you need to do next year. So your loan guy, your mortgage guy, should be somebody you work with hand in hand to what you need to do. And they're here to help you. They get paid if you get loans, so they're gonna want to help you to get a loan. So don't think of it as something to be scared of.
Yeah. Deal of the week.
So deal of the week. Is there any particular raising money? So deal of the week, I guess. So we have a hard money lending program. So anyone out there, whitesandscapital.com is a webpage. There's a link on Indar Hawaii to click to it. So click on there, indarhawaii.com, and go to lending, and you'll get over and fill out the information, and Rich will get your information. So if you guys want to do some hard money loan, Rich also has his Instagram as well. It's Hawaii_Rich,
yep.
right?
Yep.
So you can message Rich, or what's your phone number? You want to give your phone number?
808-927-0826.
Say it one more time.
808-927-0826.
Nice. So you guys can message them.
Call me, text me.
Call them, text them, send them a voicemail at 1 a.m.
Yeah. Okay. Yeah.
And just work and figure out what direction you need to go. Even if you're a seasoned investor, it's just great to always talk to other loan guys and see what I'm constantly always talking to other mortgage guys and seeing where they're at, rates, prices, market predictions. Loan guys love talking about markets. So I'm always figuring that part out as well. You can find everyone Rich at Hawaii_Rich. You can find me at indarhawaii.com, as well as all our socials, Indar Hawaii. And yeah, like and subscribe and comment, ask questions. We love answering questions. So thank you guys all for listening about loans.
Thank you.
Thank you guys. Thank you guys. Have a great day. Aloha.